Hello everyone, welcome to today's live US Open live session. 10 minutes before Wall Street, as always. I am your host Nikos Zabouras, Senior Financial Editorial Writer at FXCM, and it is of course Wednesday, February the 14th. Quite of an eventful day, of course. The main data came from the UK and showed sticky inflation, but at the same time, a significant deceleration on the month-over-month figures, and the pound reacted lower, and that is, of course, right after the inflation figures, the day after the inflation figures from the United States, which we already covered, and those worked the other way around as they boosted the greenback. Of course, we had earlier in the day quarterly results from Japanese entertainment and tech giant Sony. And what stood out was the record sales of PlayStation 5, of its PlayStation 5 console. And of course, the gaming and network services division is the biggest revenue generator of the company. These are the main themes of what we will be talking about today. Of course, as always, we will cover Euro USD and the Nasdaq and a few more things. Before we begin, please read carefully through the risk warnings and the disclaimers. Okay, let's get the ball rolling. We have quite a few things to cover. We're going to start a bit differently today. We're going to start from Sony, the Japanese entertainment and technology giant, which posted strong quarterly results and a record PS5 sales. Then we're going to talk about the UK inflation figures, today's main event, which weigh on the pound. So we're also going to talk about the cable outlook. Then we're going to discuss Euro USD. Then we're gonna talk a little bit about gold, and we're gonna round things off with the Nasdaq 100. Now, in regards to Sony, it delivered blockbuster results for the quarter that ended December, led by its biggest division, that of games and network services. The culprit for this was a record PlayStation 5 sales of 8.2 million units, which marked a 15.5% year-over-year boost. And in fact, let's look at have this graph on our screen just to see how Sony's PlayStation 5 sales have been performing. The company, however, lowered its previous guidance for the full fiscal 2023, ending in March, to 21 million units instead of 25 million previously, which said it had been a hard target to reach. And that would constitute just the second year-over-year contraction for the console that launched in late 2020 and has sold nearly 55 million units cumulatively since it was first released. And given this decline in hardware, of course, the company expected decline. The company also lowered the revenue forecast for the games and network services segment, but also for the company for total revenues as a whole. Now let's stick. We're focusing on the PlayStation 5 part at this point, and let's see what its main rival, the Xbox X and S platforms, have been doing. Microsoft does not disclose exact figures, but it's widely believed that way more people have bought Sony's device. A few days back, in fact, game developer Take Two Interactive, Take Two is the company known for marquee titles such as Grand Theft Auto, and this firm estimated that 77 million Generation 9 platforms have been sold as of the end of the last year. And of course, the Xbox and the PS5 are the main pillars. So if we take that as a basis, we can see that Sony has shipped more than twice as many units as Microsoft. Sony's reign is clear in the game industry, at least in the console gaming industry, and also is a game developer and has many exclusive titles like Gran Turismo franchise and the blockbuster Spider-Man 2 that was released a few months ago. But in a move that could alter the gaming landscape and threaten Sony's dominance, Microsoft acquired Activision in a nearly $69 billion deal, who is the publisher of games like Call of Duty. Microsoft CEO Satya Nadella said that this deal added hundreds of millions of users in Microsoft ecosystem. Now, given this acquisition of Activision and the Xbox sales lag, the US tech giant could lean heavier on the software side. There is talk that Microsoft will announce a new gaming strategy as early as this week, maybe even tomorrow, that will include opening up some of its titles to Sony and Nintendo. So definitely we will be looking forward to any updates around that. Now, in terms of the stock, so Sony is on a. This is the US listed stock, which hasn't opened yet. We're 2 minutes before the US session gets underway. So it has been doing well since the third quarter. As you can see, it has been rising, but did not manage to to go beyond the previous highs, and now this double top has formed here. Of course, whether this it's early to say whether this will be confirmed as a double top, but there is a hurdle, and it has an opportunity now to push again for that level, but we're a little bit cautious around its ascending prospects. And in fact, if we look at the RSI, it's in a pivotal point here. If it breaks below the 50 line, then further losses could ensue, and the next support is from the 200 days EMA at around $90. And after that, of course, the road would open for the October lows, but it's too early to talk about that. The recent increase give it the opportunity to move further upwards. So that's it in regards to Sony. Now let's go to the UK inflation figures. Yesterday we talked about the US CPI report, which, despite confirming the disinflationary trend, showed persistence again. And came in higher than expected. All measures, core, headline, monthly, and yearly, all were above estimates. UK inflation was also sticky, as core and headline stayed at 5.1 and 4% year over year, respectively. You can see that here we've seen this chart many times leading up to today's release, but that is the latest figures. But in this case, in the UK case, the figures were lower than forecast, and on a monthly basis, CPI fell 0.6% and the largest contraction in a year. So you can see a big slump in the month-over-month figure. That's the bottom of our screen, the orange line, and you can see that the last time that it contracted by that much was exactly a year ago. And now let's see how this translated into the cable. The US figures caused further moderation in bets around the Fed's policy path. CME now has pushed back the timing of the first cut to June and assigns the highest probability to 100 BPS of cuts by the end of the year, much closer to the Fed's projection. So markets are now coming to terms with what the Fed has been saying. That knocked the pair lower yesterday, and the figures today from the UK knocked it lower again because they bolstered pricing around the BOE, because yes, they were sticky, but they were beyond estimates, and the monthly figure dropped massively. GBP USD, as we said, extended its losses, but once again tries to hold the pivotal 38.2% Fibonacci highlighted on the chart, of which we have already talked about over the previous days. While the daily Ichimoku cloud a little bit lower, you can see this green cloud can provide support in case this level is breached, and a strong catalyst would be needed for the next major support level, which is at around 1.23, to be challenged. However, the Fed has clearly communicated cuts, and the Bank of England has more work to do on inflation, which is much higher than in the US, and thus the BOE is likely further from a pivot compared to its US counterpart. This can support the pair and give the chance to push towards 1.20 and 28, but it does not inspire confidence yet for doing that. It does find support again in the critical 38.2% Fibonacci, but sustained strength still seems difficult. As I have said again, prospects of prolonged restrictive stance by the Fed can support the greenback because the economy is good, is doing well. There is the soft landing scenario prevalent at this time, whereas on the UK side, the economy is hurting and restrictive stance can harm it even more. And of course, we expect tomorrow the preliminary figures for Q4 GDP, so more data to come, which could determine the pair's trajectory. Right now, immediate bias is on the downside, but we struggle to see sustained much more weakness, let's say, and we can see an effort to recover, but I am cautious around sustained strength. Now, let's switch to the euro dollar. It slumped yesterday after the hotter than expected inflation report from the US. We already talked about that. It breached the December lows and is now exposed to the 76.4 Fibonacci. However, the ECB has been more hawkish than its US counterpart, while today better than expected preliminary GDP figures from Eurozone could help the ECB maintain a restrictive stance. If we look at the relative strength index, it is it bounces off from oversold level, and this could give the common currency the chance to reclaim the 200 period EMA at around 1.084. But but further gains towards 1.1017 definitely has a high degree of difficulty. The path of least resistance remains on the downside, but strong moves on either side may prove elusive given opposing forces that are in play due to the rate path uncertainty. Now let's also talk a little bit about gold, which is knocked lower due to inflation persistence and the fact that traders come into grips with what the Fed is saying around rate cuts, which is yes, rate cuts, but later and fewer of them compared to what markets were expecting. And this pushed gold lower, and it is having a poor start to 2024. The slide brings the 1929, 1938 support in the spotlight, but the move already looks stretched. USD strength is contained today, and this could allow gold to find to try and to find some reprieve, but strong catalyst would be needed for a return above the 200 EMA at around 2030 USD. And let's round things off with the Nasdaq 100. Poor start to the week. We had warned of a pullback. We saw a pullback. There is scope for further pressure that could test the 200 period EMA, this critical support level, but a very strong catalyst would be required for the bullish bias to be endangered and close below the 200 period EMA. The tech heavy index already regains its composure today and keeps and remains on track for new record highs towards the 18,264 handle that we have highlighted before. Taking that out may prove elusive in the near term, but as things stand now, the bullish bias is intact, although fresh impetus may be required for a new leg higher for the index to break fresh ground. So that's it. That's pretty much it from me for today. Let's just recap. UK inflation was sticky, but below estimates, and the monthly figure showed a steep contraction. And now we expect the preliminary GDP figures from the UK. The pound reacted lower to the UK CPI. And the other major event for me for the day, of course, there were many things going on, but one that I highlighted and we talked about today was Sony's quarterly results, which showed record PlayStation 5 sales, but the company also slashed its outlook for the full year. That's it from me for today. Thank you for joining me. We will talk again tomorrow, as always, 10 minutes before Wall Street opens. Thank you.